how much do you have in your bank account? And you'll say, well, I don't have anything in my bank account. I just have 100 Bitcoin. Look, I'm extremely rich. I could buy this house if I really want to. Sorry, it doesn't count. And so we're working with financial institutions to be able to unlock that potential, to be able to collateralize your digital assets, whether it be the Vaulta token, whether it be Bitcoin, for example, so that that collateral can be counted towards being able to offer some product and services. We know that the banks are heading in the direction. We know that it's just a question of time until this becomes the norm, but we want to be at the forefront of bringing this about. Another example of this is to be able to optimize, for example, tax implications. This one's a little bit more tricky, so this you'll have to do your own research in your own jurisdictions. But traditionally, you're able to collateralize your stock to be able to take out a loan. And when you borrow, so debt is not a taxable implication. So when you spend debt, that doesn't count as a taxable implication. And so what we're trying to do right now is being able to, through this wealth management pillar that I mentioned, the product I mentioned earlier, where maybe your tokens are staked and you're earning yield on your stake. What if you could also predict what that yield could be? And you could borrow future yield to basically have debt in the system, and that you could spend that debt. And that reaches into the second pillar called consumer payments. But what if, for example, you had a certain amount of Vaulta tokens and that you knew that by the end of the year, you're going to generate $1,000 worth of interest as long on average, as long as you leave your tokens in the mix. Well, what if I gave you access to that $1,000 ahead of time at the beginning of the year, where you can go and you can spend on a credit card